Shares of the world's leading music streaming service Spotify surged in the biggest ever direct listing on the New York Stock Exchange. That surge gave Spotify a market value of nearly $30 billion. But some analysts cautioned investors not to read too much into the first-day pop. The Phoenix Group's Max Wolf.
So there's two stories here. One is Spotify, which I think is a good long-term story, and another which may be a big long-term story, which is a direct listing, right? So if this listing goes really well, we're going to see possibly a new model, especially because a lot of investors have been alienated by a recent pattern. And that pattern is a very low float IPO where they sell a small number of shares. The company does pretty well at first, kind of trades sideways, and then as you get closer and closer to the 6-month lockup, the share prices collapse, never to rebuild. So this is going to avoid all that because you're allowing the insiders to sell into the initial listing, and there's no lockup period of the traditional type binding people into the name. So I think we might be on the cusp of seeing, at least for the highest flyers, an interesting alternative to a traditional IPO.
Nearly 91% of Spotify's 178 million shares were tradable, which is much more than typical in a traditional IPO. Some 14 million changed hands within an hour after trading began.